At 9:01 a.m., your phone buzzes. Salary credited. You feel richer for about 3 seconds. Then the rent reminder pops up. The credit card balance stares back. The EMIs line up quietly in the background. And just like that, the money is already gone. Here's the uncomfortable part. In the modern economy, your salary is not really income. It's a short-term loan that briefly visits your account before continuing its journey to someone else. Most people never notice, but once you see it, you can't unsee it. And the timing couldn't be worse. Right now, household debt is near record levels in dozens of countries. Credit card balances are growing faster than wages, and buy now, pay later has become normal for groceries. So how did we get here? How did work turn into borrowing? Let's rewind. 2 generations ago, the deal was simple. You worked, you got paid, you saved first, you bought later. A house took decades, but groceries didn't require a payment plan. Debt existed, but it lived in specific places. Mortgages, business loans, occasional emergencies. Then something shifted. Quietly, systemically, almost politely. Wages slowed down. Not collapsed, not disappeared, just stopped keeping up. Productivity rose, companies scaled, technology exploded, paychecks politely walked. At the same time, prices didn't wait. Housing ran, education sprinted, healthcare took a helicopter. So the gap appeared between what people earn and what life costs. That gap is where the modern system was built, not on saving, on filling the space with debt. At first, it was framed as help. Credit cards were flexibility, student loans were investment, car loans were freedom. Then came subscriptions, then EMIs for phones, then financing for furniture, then apps that split a $3,000 purchase into 4 easy payments. Suddenly, your future income started getting pre-sold, month by month, before you even earned it. Here's where it gets strange. When your salary hits your account, a big part of it is already owned, not legally, functionally. Banks have claims, landlords have claims, lenders have claims, utility companies are waiting in line. Your paycheck doesn't start at 0, it starts negative. You're just filling a hole. Let's do simple math. Say you earn $50,000 a month, rent $18,000, loan EMIs $12,000, minimum credit cards $4,000, subscriptions, utilities, transport $6,000. Before food, before savings, before emergencies. That money isn't choosing where to go. It's executing instructions written months or years ago. You're not allocating income, you're servicing past decisions. That's the mechanism, and it scales. Now, zoom out. Banks don't wait for your salary to exist. They create the loan first. When you take a loan, the bank doesn't hand you someone else's saved money. It types numbers into existence, new money. You promise future work. The bank creates present cash. Time itself becomes collateral. Your next 5 years converted into spending power today. From the system's perspective, this is elegant. From yours, it's heavy. Because now growth depends on you continuing to borrow. If people stop taking loans, spending falls. If spending falls, companies cut jobs. If jobs vanish, loans default. So the machine encourages more credit, lower down payments, longer tenures, smaller, easy installments. The price of things rises to match the maximum pain people can tolerate monthly, not the total cost, the monthly. That's why houses aren't sold for their real price. They're sold for only $35,000 a month. It sounds smaller until you multiply by 240 months and realize you bought the same house twice, once for yourself, once for the bank. Here's the irony. You are told you're free, flexible, empowered, but your calendar is owned. Your next raise is already booked. Your next bonus has been imagined by 3 different lenders. Even your emergency fund has a job, protecting the system from your instability, not the other way around. And the system is fragile, because it only works if tomorrow's salary always arrives. A recession breaks it, a layoff breaks it, an illness breaks it. That's when the truth shows up, that your income wasn't income. It was a payment plan for your past. This is why financial stress feels different now. It's not about being poor, it's about being early. Early to spend, late to earn. Living slightly ahead of yourself, forever. And it's why small shocks feel big. A 2% interest rate increase, a rent hike, a medical bill. They don't reduce comfort, they attack the structure holding your future together. Now, to be fair, debt isn't evil. It builds cities, it funds businesses, it moves economies. But when an entire middle class runs on borrowed time, the system stops being a tool and starts being a dependency. We've built a world where your labor is pre-consumed, where stability means nothing goes wrong, and where doing well often means managing liabilities quietly. So the next time your salary notification lights up your phone, pause, look at the number, and ask a strange question. How much of this is actually mine, and how much is already promised to a version of me that no longer exists? Because the day your salary became a loan was the day the economy stopped waiting for the future and started spending it in advance.